Hey guys, how is it going today? So the last time I looked at ETP was just yesterday. It's only been a day, been absentee. Do we need to cut our losses with a machete? Make it an amputee? Is it still hot waters like the Baltic Sea? Is it stinging like a bumblebee? So hot, sushi with some wasabi? Will it moon like a Christmas tree? Or is ETP just another wannabe? Let's take a look at it then so we don't miss our chance and it becomes an escapee. Let's make her sweet like a honeybee. Lastly, big shout out to my homegirl in Victoria, BC. Without further ado, let's analyze some ETP. Drop the mic. Okay, guys, it's time to get into some serious mode. Okay, guys, no more joking around. Let's take a look at some ETP now. So where did we leave off yesterday? Okay, I remember where we left off now. We had a major resistance over here, right? Right there. Right there, right guys? Okay, yesterday we left off right here. Just to catch up the new viewers, we have our Elliot Waves, 1, 2, 3, 4, et 5, and then we have our A, B, C correction in there, right? And then within our A to B, we have our small sub A, small sub B, and small sub C. And then we have our C and our X right here for Elliot Wave. And then we have our 5 run up, or it could be just a simple ABC again up there to X. But what we do know about X is that from X to Y, there's always an ABC. So we have our A, B, C down here, and then from A to B, like how here we have from A to B, we have A, small a. Okay, this is really important for you guys to remember this part, okay guys? Every time we go from A to B, we always have subwaves A, B, C up there, okay? Just like how here, I'm going to zoom into a closer time frame for you guys to see. Every time we have from A to B, right, we have subwaves A, B, and C up here, okay? And then from there, B is always going to move down to here. For example, it moved down to a W position. And then from this B position up here, it moves down to a C position, right? And because it didn't break out of this resistance, people were really wondering like, oh my God, why they couldn't get a higher high? You know, they're blaming it on Bitcoin dumping, they're blaming it on bad news or the exchange delay, etc. But we all know the truth. It's because it just couldn't break this resistance, right? B right here and X, when you draw a line through it, it makes a pretty strong resistance right here, right? This is the 1 hour chart, by the way. And because it couldn't break out, and this is primary wave 1 right here, primary wave 1 right here, right? Because it didn't break out from here as well, for example, when ABC finished, we knew. So first of all, okay, we're gonna back up a little bit. We're gonna assume every time an ABC finishes that a wave, which is wave 2, we're gonna assume that it's gonna start its next big uptrend. But because it didn't, and it moved down to the Y position right here, right? We're gonna assume that whenever an ABC correction is done, it's gonna break up to the uptrend, right? And because it didn't break out to the uptrend, now we have to assume again that it's gonna do something like that. This is kind of scary, guys, that I drew this in yesterday, if you remember, and the last time I opened it up was right now, and that's exactly how it played out. So that's kind of crazy actually that it played out exactly like that, if you guys remember, okay? Exactly, okay? That's super fucking scary when I think about it. Actually, let's take a look. I want to see if I drew it the exact same way. I'm gonna just check my video just to see the accuracy of some of my charts. Okay, gentlemen? Metaverse, November 2nd. Only be traded on. Yeah, I sure did, guys. You guys look at this. Okay, this is yesterday's chart. All right. This is yesterday's chart, A, B, C, that I drew. Take a look. Take a look really close, guys. Okay? A, B, C. Do you see this? A, B, C. Now take a look at today's charts. All right? A, B, C. Well, my C was a little bit lower, but I knew it was going to test this resistance, guys. And now, because it could not break it, unfortunately, we're going to end up going down to $2.59. My friend from Victoria, BC, the one I gave a shout out to, she actually bought it at $3.60. Ah! I wish she talked to me first. I would have definitely reassured her and told her that there's no fucking way it was probably going to make it there, okay? So, like I mentioned yesterday, there were 2 possible cases, okay? 2 possible cases was that, okay, every time we get down to an A position, we go to a B position, right guys? We go to a B position here, and then we move down to a C position every single time, no matter what. That is unfortunately the laws of Elliot Wave, guys. And my friend is gonna actually lose, I don't know how much she played, but she's gonna lose, I should probably talk to her. She's gonna lose 45, she's gonna lose 45% of her money by the 4th. Tomorrow. Oh no! I gotta talk to her about stop losses, stop losses. So every time, once again, it, you know, where we reach right here. So this could be called an X position as well, we'll say. Every time there's an X position, it's gonna move down to an A, and then it's gonna make our ABC attempt, right? And then it moves down to C before it can try to break out again. Before it tries to break out again. So it tries to break out there but couldn't, tries to break out there, couldn't. But it does not make sense for it to try to break out from here, for example, okay? Because it needs to do the ABC correction first, always, and then it tries to break out. So it was possible to, it's not possible for it to break out from this position, for example, okay? Because the ABC correction hasn't formed, right? It's not possible to break out from this position as well because the ABC position is not formed. Does that make sense, guys? So it only can break out from this C position, or from this C position right here, or from this C position right there. What I mentioned yesterday was that B could have, you know, it could have been a little bit higher, right? Could have been maybe a little bit higher, but we knew it was going to get that high just based on history. So let's take a look at some things here. Let's take a look at our Fibonacci tool, and this one here retrace to 618 level, all right? That one retraces 618. We can make a general assumption that this one might retrace 618 level, and this one didn't even come close to retracing 618. It only retraced to 382. That's how we know that the market was slightly bearish there, okay? And now this ended up being our B position, so we can make the assumption as well that it might retrace 618 to 382. And how much did this one retrace? Only to the middle, actually. Only to the middle. That is definitely not a good sign, right? This one was 618, about, no, not barely 618. This one was about 0.5, we'll say. Actually, sorry, so yeah, 618, it retraced to right here. This one retraced to, I'm just trying to make it more accurate, 0.32, and this one happened to be the one to 0.5, which makes sense, right? So if you have a WXY correction, and two of them peak at, say, you know, one at 3.8, one at 618, then the other one's very likely to reach 0.5. They just kind of balance out that way for Elliot Wave rules, okay? Kind of like how if wave 2 retraces 382, then wave 4 will retrace 0.5 or 0.68, and also vice versa as well, okay? So now, like I mentioned, we were gonna attempt to break it, okay guys? And I was actually talking to her yesterday about something called a bull trap, which this is actually a perfect opportunity to talk about what a bull trap is for you guys. Let me explain what a bull trap is to you guys, okay? First of all, we identify the resistance points, okay? Very important to identify it clearly. This is or resistance slash support. This is 1, this is 2, this is 3, okay? Yeah, we'll say that was 3. You know what, we'll draw it, we'll bring it up a little bit just to make it cover more area. 3. Actually, this one didn't even touch it. We can adjust it every time, but the main key points is basically this one, right? 4 and then 5 points. That's how we would count it, like that. But because we're now on an uptrend, we want to take the most relevant one. So what's the most relevant point that you guys see? It'd probably be right here, right? So what we're going to do is just move it slightly, touching it right there. Now, a lot of people are going to think, oh, great, we broke through it. We broke through it. Awesome. Looks like it's going to break through. But this, ladies and gentlemen, is what we call a bull trap, okay? And a lot of newer traders will fall for this. And I'm going to explain to you guys how a bull trap can be avoided, okay? First of all, this candle did close above it, but only the body rather. What we need in order to close successfully above it is the next candle to close above it, okay? Not just the actual candle, but it needs to have a body successfully closing above it, okay? And that is really, really important to distinguish, okay? For example, you guys might try to go into a position somewhere here, right? But what a professional trader would do is they would actually do this instead of actually just going in from the bottom. They'll wait for a successful close first of all. And the successful close is this candle right here on a 1 hour chart. And then they'll shoot for the resistance point that's been identified already, okay? And then they'll set their stop loss for slightly below it. Now, how do you know it closed above it? Well, all of these candles are not actually closing above it, right? This one here, the body breaks it, right? The body breaks it and it closes above it. But now we want a confirmation candle of two things. One, the wick must poke through the EMA. So I have a set of guidelines that are incredibly strict when I trade. That's what keeps me profitable over the long run, okay guys? And because I have these strict set of rules that keeps me profitable over the long run, you guys also need to develop these strict set of rules as well. I don't trade based off of emotion whatsoever. My mind is like a temple, guys, okay? So when you develop really, really good habits, they're very important to maintain. Now, this is my rule. Rule number one. I have a rule book. I have a guidebook, okay guys? It's pretty awesome. I'm in the middle of writing all of it, and it will be done probably in about a year, I'm guessing. Right now we're at 120 pages or so. And I have a set of rules for every, well, not every, but like different sets of circumstances, right? And depending on the circumstance, I refer to them as a general guideline. That's something I will not share with you guys though, because it's my own rule book. But I'm just letting you guys know as an example. Rule number one, for this particular circumstance, body must close above, okay? Just the body must close above, okay? That's basically one condition. Do you guys see what I mean? The body is closing just above it, just the body, okay? And basically, what do you call it? A corollary. It's like a consequence of one of your conditions that must be met, right? So one condition is basically this: body can be between the moving average, the 55 specifically, 55 moving average, okay? That's how it is, right? So what that means is, right, the 55 EMA can be in the middle of the body of the candle, okay? And then 3, the next one, for the next candle, the wick must poke through the 55 EMA. And then my next condition that must be met is the body must successfully close higher. Sorry, I'm not quite there yet, okay? Let's make this 4. And we'll have 3 in here, okay? The next candle must have a higher low when opening, okay? Now I have to have a wick that must poke through the 55 EMA. And the reason for that is because the bears need to make an attempt of rejection, okay? That's what the 55 EMA does. The bears attempt to push it back down, but by the end of the candle close, right? The end of the candle close, the body, it was rejected by the bulls and it shot back up, okay? And basically the last condition is generally must open and close successfully, just to summarize, above the 55 EMA with a longer wick, okay? So these are my conditions basically. So let's go over it again. 1, the body must close above this candle first. 2, the body can be in between the 55 moving average and the body can be between the 55 moving average. The EMA can be in the middle of the body, which it is right here, okay? The next candle, whoops, must have a higher low when opening, okay? Yes, check mark, when opening. For the next candle, the wick must poke through the 55 EMA, okay guys? And just to summarize, it must open and close successfully above the 55 EMA with a longer wick, okay? Now, I'm going to show you guys what a bull trap is over here. Now this looks like the body is now closing it, but it doesn't meet my condition, guys. It doesn't meet my next condition, so I would not enter a trade, right? Watch, it doesn't meet my condition of this one right here, where the 55 EMA, well, actually that one is okay because it's already above it, but the next candle must have a higher low when opening. Yes, it does have a higher low, right? But there's no rejection of the wick. Instead, what we see, take a look at this on a 2-hour time frame. What we see instead, guys, when the body, okay, so when we have a green candle, and then we have a red candle, okay, red candle like this, right next to each other. You guys know what that looks like? It on a higher time frame, it actually just looks like this, unfortunately. The bodies of the candle cancel each other, right? And you just get that. And do you guys know what that candle is? It's actually the most powerful reversal candle called an inverted hammer. It could be called this one, an inverted hammer, like that right here, okay? Or a shooting star. So that's an inverted hammer. That is a shooting star, okay? Right here. So what this means is the bulls attempted to push it up, but instead it was rejected by the bears, okay? And that is what a shooting star is. So when you look on a higher time frame, guys, on a 1-hour candle, it looks like it's about to go through it, right? But because the next candle did not successfully close above the resistance line, and it's actually very bearish, we look on the next candle and see this massive shooting star. And that indicates in market psychology that the sentiment is very bearish. The bulls tried so freaking hard to push it up, but now they have actually, the bears have pushed it back down. Not only did we get a shooting star for this candle right here, right? But we actually also got a double shooting star. And on a 4-hour chart, it is the nastiest candle you can see, guys. It is the nastiest candle you can see when you see a shooting star. And I don't even want to get into how ugly that candle looks. Here's one right there, guys. And last time we saw a shooting star, I don't mean to scare anybody right now, guys, but that is my technical analysis. Last time we saw a shooting star, it dropped 34%, okay? Last time we saw a shooting star, every time we see these shooting stars, it dropped how much? 30%. This one is basically a doji, almost a shooting star. It dropped 34%. Notice the trend so far, 34% so far. It's a pretty ugly candle, guys. I'm sorry to say. Look at this one. We saw it here. This one made one last attempt, and they have, this one dropped a total of 40%. Yowzers. So I'm gonna expect 30 to 40% drop for this, guys. And if we do a 30 to 40% drop, guess what, guys? We are gonna hit my C target right there. Now, how is this C target derived? Okay, guys, that is really important. First of all, we take from X to A pretty much, or X to C, and then we use our Fibonacci tool right here. Fibonacci from, for example, we'll do it from here first, here to here. We notice that this one fell to a ratio of about 618. That's cool. Now, what about this one? This one fell to a ratio of almost 1-to-1. Okay, guys? What it means is if we use this as our base range, right here as 1, okay, on the next higher peak where it started the downtrend, it moved in the same ratio almost at a 1-to-1, okay? Now we're going to use the most relevant information, which is also a 1-to-1 ratio, and we're going to see where B ended, right, guys? We're going to see where B ended pretty much. Actually, you know what? I might stand corrected. Let me take a look. A, B, C. One sec. Yeah, I suppose I can't use it that way yet. We don't have an X point, so who am I kidding, right? What I should be doing instead is let's delete all this and let's get a better picture because I'm doing my Fibonacci extension a different method. So let's do it from A to B right here. This one dropped between 618 and 786. Now let's do it again from this point, from A, just to B. This one didn't really retrace much at all, okay? It did not retrace much at all. It's actually getting a lower retracement. So we're gonna shoot from now from say X to here, from here, and to the highest point B. So what I'm expecting is maybe a ratio of about 0.5 again. If this one did about 382, or sorry, about between 618 and 786, and this one did even less actually, we're going to expect this one to fall to about C here to get a double bottom. That makes a lot more sense to me. Much more sense to me. So we are probably going to fall again, guys, to unfortunately $2.84. We can confirm it many ways right now as well, okay? One, let's look at a really high time frame, okay? This one could barely get a higher high. In fact, it's curving downwards already. We just draw these, right? It's losing momentum. Ever since it reached the top here, it's been losing momentum, right? So let's look on the 4-hour time frame. Overall, it is losing momentum as well. It needs to break this resistance line basically to gain some more momentum on the RSI. So the MACD looks like it's slightly going up right now, just slightly. Might be going up a little bit in the next 4 hours, but not before it hits the point C. 1 hour looks like it's about to curve down, unfortunately. Now, don't get me wrong, guys. Like I'm not bearish in any way, bearish bias, right? I'm not bullish biased either. This one is literally just about to cross there, right? On the 45-minute chart, it couldn't break into bullish zones, not even close. It basically peaked out right there at 67. 30-minute chart, it might have peaked a little bit. Yeah, it does peak a little bit. Usually when it's going up to B, for example, you'll see it peak a little bit high, right? This one kind of meets that criteria. When you see it go to X, it usually peaks up a little bit as well. So every time from X to A, we get 5 waves coming down. 1, 2, 3, 4, 5. To B, we get a triple wave, right? 1, 2, 3. It's always how it is. It's, for example, X to A here, we get 5 waves as well. 1, 2, 3, basically 4, we'll say, and 5. And here we should get small 5 subwaves as well. Because if you guys look from B to Y, just look here, for example, okay? 1, 2, 3, 4, and a big 5th wave extension right here. 1, 2, okay, 3, 4, and then a big 5th wave. Here, what do we have, guys? We have 1, 2, 3, 4, and then 5, basically. This whole area can count as 4, we can say, and that one will end up being 5 right here. So we're always getting 5, or this one could have been 3 as well, right there. That could have been 4, which pretty much matches the criteria. Is that making sense to you guys so far? So from this one here, look how many we have again. 1, 2, 3, 4, and then 5. I'm basically taking the lowest points and the highest points and counting them, right? You don't count those ones because it's just in the middle. So what can we expect from here as well, guys? We can expect a slight downtrend. 1, 2, this one will be the biggest, I'm guessing. 3, maybe 4, and we might get a 5th wave extension just like that. So before we make our way to the next relevant point, this is absolutely gonna, not absolutely, because the market can change all of a sudden, right? But when we look at the 30-minute chart as well, you know, it doesn't really look too appealing, does it, right now with all those shooting stars? And usually what happens is those RSIs end up getting severely reset. On the MACD, we already see a bearish divergence with it coming down, with the crossing over of the MACD, right? So as much as I want to believe that this is a bullish sentiment right now, we missed a chance to go long. And we missed a chance to go long when I was making in my last video, right? So in my last video, where I'm just going to pull it up for you guys quickly, just to make sure we're all on the same page here. So I suggested that it was a good opportunity to go long. Now keep in mind, guys, if you guys watched my analysis 1 day late, you could have very well missed out already, okay? So here, the price is at $3.54. That's my green ticker price line, right? And I suggested to go into a long position around over here because it just makes sense. It's bouncing, the RSI was going high, and this box right here, what do I say, guys?
So you guys would be looking at a risk-reward ratio of 16.42 to 1.
Exactly. I'm suggesting to short it if you guys are seeing. The green box is the target zone. If it does not
if it does not break this resistance line,
listen,
definitely want to consider entering a short, okay? Because it tried, and then you want to target 1-to-1 ratio.
Okay, guys, so just to be really clear for the people that are a day late to my analysis, that yesterday I specifically said that it's a good time to go long because we want to take the chance to try to break the resistance once it hits point B, right? But if it does not break it, I also specifically said to just short the motherfucker. And what ended up happening on the 2-hour charts, guys, we're getting a lot of shooting stars, a double shooting star. So now it definitely makes sense to short this guy and aim for at least a ratio of 284 or 264. But keep in mind that these are not financial advices that I'm giving, right, guys? And these videos are posted hours later. So if you watch it and you're like, oh, he suggested that it's good to go to a short position, that is absolutely wrong, guys. So these analyses are made well later after, right? So we're just basically catching up from the previous day. So unfortunately, guys, that is where we stand right now. We could not break it. We got a double shooting star on a 2-hour chart and a massive shooting star on a 4-hour chart, which implies down we go. So if every single wave here, from say A to B, or sorry, to C, made 5 waves there, right? And B to C, or B to C here also made 5 waves, is it possible to assume that there will be a 5 subwave structure coming down here as well? Absolutely. Now this might just be the first subwave of the first wave, right? So it might actually just be like this instead, right? 1, 2, 3, 4, and then 5. But that right there could be the first wave of the first subwave, right? So sometimes there's 5 waves within 5 waves. So we always want to target a ratio of 1-to-1. Okay, we always want to target a ratio of 1-to-1. No, we don't. Sorry, my bad. I meant to say that this one over here reached the Fibonacci of about between 786 and 618. This one reached, not even 382 about. So this one it makes more sense, like mentioning that if one reaches 3.82, one reaches 0.5, that it's safe to assume that the other one could reach anywhere between 618 to 786, right? So if anyone shorted it, a good target area would probably be this zone here, the 0.5 to 618 level. That would be your target. And then after we finish this wave right here, guys, I'm going to delete some of this. After we finish that wave right there, right, this could be a very good zone to go into a short or a long position because we'll have double bottomed out over here, okay? Does that make sense? I hope it does. So we try to go into a long position right over there. And then where do we shoot for again? Well, first of all, we shoot for this position right here to break the resistance. Always testing multiple points, right? We test there, and then make sure you guys don't fall for that bull trap again. And then if we break that resistance, then we test this one. But don't forget that it needs to break it with conviction, guys. It needs to break it with absolute conviction, if you know what I mean. It needs to successfully close well above it, like how I'm well up right now in my EOS position. I played 4 positions already. When I scalp, I play $5,000 positions, right? Just a round number. I made 3 scalps today, 4.8% up already, and I played 1 major position that was 3.5% up already. So I'm incredibly happy to be up, 8-9% already for the day. Basically done work for the day already. Now I'm just going to finish my Stranger Things TV series. So once again, we will shoot for a short target of maybe 786 to 98 there. Could be a little bit higher. Don't get me wrong. Excuse me. Don't get me wrong. We got rejected pretty hard, right? Going into there, as you guys saw with the shooting stars. Now the target box could be anywhere between 382 to 518 Fibonacci level right here. So you guys have to make sure that you guys are watching the level, not the level 2, but the just the indicators and all the, especially RSI, right? And make sure you're looking for candlestick formations, especially because they will confirm whether or not we're in an uptrend or not. Okay, candles are really important to confirm. There are some key candles to look out for that confirm, like a dragonfly doji or a hammer, for example, or just doji in general. Any type of confirmation candle, that will be the signal for you guys to go long. Now, once again, if you guys do go long and we end up moving into this green region between 264 and 305, guys, then we will first shoot for this target right around 360. 360. We got to try to break this one, and then if we break this one, it will, with conviction, it will most likely attempt to break 390. If it does not break 390, it will most likely just use this as a support again, and then we would just end up wedging, guys. Whoops. We would just end up wedging really, really hard in here. And that's where the market forces are being pushed and pulled in every direction, right? And the market will then be neither bearish or bullish. And then what will most likely happen if it bounces there is it'll do a 5-wave correction, something like that, right? Something like that, who knows? And then it could possibly break out. That is most likely what will happen. And the breakout though, guys, the breakout could go any direction because this right here is a descending triangle, right? If it breaks back into there. A descending triangle, that's really important to understand. It is not a symmetric triangle, where a symmetric triangle is like this, okay? It is not a wedge like that. That's bullish, or bearish, I mean. And it is not a falling bullish wedge that looks something like this, okay? It's neither one of these. This is a symmetrical triangle. This is a rising bearish wedge. This is a falling bullish wedge. So this one here, for example, you know, I'm just going to count 5 quick waves as an example. This one could go either direction, anytime, anytime. This one here, always downtrends after it breaks out of it, no matter what. It downtrends. This one here goes up. So this one can go either way. Let me just show you what I mean. This one can go up or down. This one, when it finishes the 5-wave structure, it goes down. This one, when it finishes the 5-wave structure, it goes up. But these triangles are a lot different, okay? Where it looks like that. Basically what it means is there's so much pressure to go down that it actually went down once already. Now the bears are actually attempting to go back up there, right? They made it one attempt there, failed, so they're gonna fall back down and then to a respectable support level, most likely to where it came in before, and then it's gonna, once it finds its support, it will try to go back up into this bullish area, right? And if it does get in there, the forces will be squeezing each other, and it will get tighter and tighter and tighter, and we could expect a breakout sometime November 9. That's where these points meet, okay? So there you guys have it. That is my Elliott Wave analysis combined with some fundamental analysis there using Fibonacci and some targets. So have yourselves a great day, guys. And you know what made me feel awesome today? Actually, yesterday, someone for the first time, guys, don't get me wrong, I don't do this for money, and you guys know that of all people, right? I don't do this for money. I have not made any content that you guys need to pay for. I have not made any material where I'm asking you guys for money or anything like that at all. I will never do that. But this guy said to me he wanted to give me 100 EOS coins because my analysis really, really helped him. And that made me feel like $1 million fucking dollars, guys. Doesn't everyone love being tipped for doing something amazing that they do? Don't get me wrong. I'm not asking you guys at all, okay? It's just a general gesture. If you guys like my analysis, send me a motherfucking $2 tip, guys, so I can buy myself a coffee. You know what I'm saying? My address is in below. If you guys haven't subscribed to me yet, make sure you guys do. Subscribe to me, follow me on Twitter, blah, 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 send me tips, blah, 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 maybe 500 Bitcoins while you're at it as well. Have a great day, guys. I'm going to do an analysis on EOS, but we're going to approach it from a very different perspective, this time using a trend line analysis because I'm now saying fuck Elliott Wave. Okay, guys, and we're also going to do an analysis on IOTA later today as well. Have yourselves a great day and take care, and thank you for watching.